trading at its best.
I'm Mike Swanson. I've been trading the Forex markets for just about 10 years, and that's been full-time. And so, you know, I've tried everything from robot trading. I've built my own robots. You know, I've even did a little bit of futures trading, correlation trading. You know, I don't want to go over everything, but you know, I went through the cycles for the first couple of years. I eventually figured out some loopholes in the market, and that just made me a lot of money trading. And that's why I started this blog and these websites, is to teach others what I learned, because those first few years were very difficult and very frustrating. So hopefully you guys will enjoy these lessons. Remember, we always record these so you can go back to the blog and watch the replays. Okay, so with that all out of the way, let's go ahead and take a look at today's lesson. Will be counter trend trading. So we haven't really covered a whole lot on this yet, and so I'm going to teach you today what is a counter trend trade. We'll talk about how to pick tops and bottoms in the market, and we're going to talk about the free trading tool. Okay, so that's kind of the plans for the day. It's going to be a pretty short lesson, and we're going to go onto the charts, and then we'll open it up for the Q&A. So to start off here, what is a counter trend trade? Okay, this is a trade that is taken against the current market momentum. If the momentum is really strong to the upside, a counter trend trade would be selling against that, trying to pick, you know, where there's a spot where the market might consolidate or pull back. Okay, and this usually happens when the market's exhausted. After it's been pushing really hard, you know, traders will start to take profits off of the market, and that's exactly what causes, you know, what causes a trend to pause and pull back and go into a counter trend mode temporarily before resuming the trend. Okay, so these types of trades, however, they can be taken with or against the major trend. So maybe it's counter trend to the last couple hours or the last day or two, depending on the time frame you're on, but maybe over the long period, you know, a few days or a few weeks, you know, you can still be trading with or against that major trend. Okay. Next thing here I want to point out is actually, something that's really important with any style of trading, but especially with counter trend trading, and that is be careful around fundamental events. Okay. Whenever you're counter trend trading, you can get caught on the wrong side of a major move, so just because of a simple news event that comes out. I've always taught, if you're going to trade the news, trade in the direction of the major trend around the news event. And even just that basic strategy is actually gives you an edge in the markets, is just to say, okay, there's news coming out for non-farm payroll. The major trend over the last few days has been up, then you want to buy with that news event. Okay, so the same thing would go for these counter trend trades around news times. If just before the news it had been pushing hard down, you want to only sell if you know, even though if it's been pushing down, you don't want to try and buy a counter trend. So you skip those. I'll go over some examples, but this is the basics of the counter trend trade and kind of what causes it. Next I'm going to talk about here is how to pick tops and bottoms. So that's basically what you're doing in a counter trend trade. You're trying to get as close as possible to that turning point where the market finds the extreme support and resistance and makes the correction move back, does a pullback, maybe to a trend line or to another support area before resuming. Okay, so what you need to actually look for here is pressure on the market from limit orders. That's extreme support and resistance that I'm talking about. Okay, so I'm going to show you how to find limit orders on the market. If you've watched any of my past trainings, we've talked a lot about market sentiment, and we're gonna definitely go into that today as well. And like I say about the major trend, while you're learning this method I'm teaching you today, stay with the major trend. you can counter trend trade against the major trend once you get some practice, because there's some very good trades you can find in the markets that are against the major trend, especially if it's, like I say, not around news times. So we're going to go to the charts and show both different types, with the trend, against the trend. We're going to look at some trade examples and pull this together. So let me bring up my charts here. Okay. So here we have a euro-dollar daily chart. So this method, you can use it on any pair and time frame you want, but I'm going to focus on the daily chart for now. And what we're going to do here is zoom out so that we can see, if I'm on a daily chart here or any time frame, like I say, we're looking for a couple hundred bars. I can see I'm looking at a little over 300 bars here. And you can either use an indicator to do this for you or just visually look, but go to the far left of the chart, see where the price was trading, go to the far right. If it's up higher, you're in an uptrend. Really simple. You can clearly see it's in an uptrend. It's had quite a few pullbacks, but it's in an uptrend. So what you'd be looking to do if you were going to trade against this major trend, you would be looking to sell, okay? And if you zoom in, the recent movement was up as well. So you're looking to sell. You're looking for that point where it's finally going to stop and turn, and that's what just happened 2 days ago. It looks to have found a top and to have turned down to, so that's where you can go short. Okay. Now, what you're going to learn here is when you take these types of trades using this method I'm going to teach you with the sentiment indicator, you don't need to have large stops. That's a big mistake that traders make when they counter trend trade. Is, let's say somebody, let's just back up over here and I'll give you a quick example. Let's say somebody thought that this big candle break was a false breakout. They thought maybe it was turning right there, and they decided to go short. Okay, so they'll put their stops in, giving it lots of room, or maybe initially not a whole lot of room, and as the market kind of plays out, slowly starts to come down there and it jumps up. Before it hits their stop, maybe they move it up. And this is a big mistake that you don't want to make. Never move your stop unless you have a very good reason to do so, and that you're not adding a whole bunch of risk doing so or doing that. So, but they'll put these trades in counter trend, thinking they have to win. It has to be the top. At some point, it must turn. The market never has to do anything. It could go another 1,000 pips and leave you in the dust. So, what you want to do with these types of setups I'm going to teach you, you're getting in when there should be momentum shifting in your favor. If it doesn't shift and it does something like this, let it take you out for a loss. I mean, we're talking about keeping really tight stops like this, so that way when it does come down on a counter trend trade, it's best to get out as soon as possible and just take the profits. Don't try to catch the major shift of the trend going into a downtrend. We're just trying to capture the little pullback. And if we're just getting a little pullback, we need to make sure our stops are tight so our risk-to-reward ratio is in check. Okay. So now let's look at some examples with the indicator. Let's bring up our tool. This is a tool that's free for everyone to use. It is called the TradeWest Forex Informer. And I'll give you the download link here in just a minute. This tool has a lot of different things inside that you'll see once you download it, but for today we're going to focus just on this Market Sentiment tab. So when you first load this up, you'll select a pair that you want to look at. So we're on the euro-dollar. We can go down here to euro. And then you're going to display, it says display last. You can look at the last 24 hours of data, the last 7 days, or the last month. So it's not a time frame like you're used to with charts. It's an amount of time that you see in this width here. So that's 24 hours on the screen that we see from left to right. Okay, you can look at the timestamp up here and the dates and see that 15 was over here, we're about 24 hours. Okay, so you're seeing a bunch of colors now, and you're probably wondering, what is all this mess? What does all this stuff mean? Well, what this is telling us is where the real limit orders are at in the market. Traders that have buy limits are going to show up in green below the price. Traders that have sell limits are going to show up in red above the price. If you ever see the colors on the opposite sides, those are stops and not limits. So if there were red below the price, that would be a sell stop. If there were green above the price, that would be a buy stop. And but what we're going to focus on today will be just when you see green below, that's considered strong support. The darker the color, the more orders and the stronger the support. If you see red above and it's really dark, that's strong resistance. So these numbers here, we don't pay a lot of attention to this. The percentages here, this is just telling you on the whole books what percentage of the orders are at that specific price or that area. So I wouldn't worry too much about this. Just look at the colors. The darker, the better, I guess you could say. The stronger it will work out for you. So, okay, so now if we're trading daily charts, you know, we're going to be looking at the 24-hour period and the 7-day, maybe the month occasionally. And so we can go down here to the last 7 days, and we can see, let's see here. Let's say we're going to trade with that major trend. This is showing us about the last 7 days or so. Okay, so the major trend we know, we zoomed out and saw, we could even click this here. You can see the major trend is definitely up. So here you're getting this pullback, and you're looking to try and find a bottom, right? We're trying to find a bottom in the counter trend to go long, which is in the direction of the major trend. So let's drill down to our 7-day, and whenever we find the price at these dark areas, that's where we want to look to possibly take action. And what we're going to do, though, we're not just going to say, okay, we're at that green area, let's take a trade. We're going to add something here. We're going to combine another lesson I taught the other day, which is the market structure highs and lows. So what you're going to look for when you're looking to buy, and it's down here at this green area, is a market structure low. Okay, so this actually formed yesterday. So let's see, that was right around, we got the little crosshair you can use up here now on this new version. This was right around 1.37. It was right around where that green area, that dark green area is at. Okay, so we're going to, on our charts, let's go see what that looks like. I'm just going to draw a line across here at 1.37. Okay. So now, since we are looking at the we're looking at the 7-day period here, this little blip up doesn't look like a whole lot. So you know, this might be a better suited trade for the 4-hour or the 1-hour time frame for the entry. But you can see it on the daily. It's just not as clear as, let's see, if we drill down to the 4-hour. Let's see here. Maybe not even the 4-hour. Might have been, it ended up being a 1-hour type setup for that. I'm just trying to show you that where it kind of made that bounce. Okay. So here it was coming down really strong, and all of those buy limit orders were sitting right there. Okay, this corresponds to that move right there, that little leg down. And then it hit those limit orders and bounced up. This is where you would look to take your buy trade. Okay, but like I say, what we're going to do is not just get in immediately on these lows. That's too much risk. We need a confirmation. And the best confirmation I found is the market structure low pattern for buying, market structure high for selling. So what you look for, I'm going to draw it here on the chart, is it's just a 3-bar pattern. We'll review it real quick. You need the market to make a low, like it did here, and then a lower low. This one was slightly lower, and then a higher low. Okay, low, lower, low, higher low forms a little V shape here. Okay, and then once it forms all of that, you need to look for it to break this high, that 3rd bar. That's where you go long. Okay, now this one made a nice run up and then started pulling back. So like I say, with these trades, we're going to keep our stops tight. I mean, we could put our stop at the low of the entry bar, just slightly down here, and look for 1-to-1, and that would have given you about 1-to-1 on that trade right there. Really simple, quick trade. You're just trying to get in, catch the momentum shift for the counter trend trade, and then get out before it turns back to the major trend. Or in this case, the major trend is up. So, but you don't want to get caught in that potential shift of the trend direction. Okay, now let's look at another example. So that one was more like, say, for an hourly setup. We're going to need to go. We'll change our period on the or our time frame we're looking at on the sentiment back to. Let's go up to the month. This will be better for our daily charts, actually. I had it a little mixed up at first there for you. So, okay, so even on the daily, though, you do see it hitting that green area. It's just this trade may take longer to develop. So, I mean, you still could have taken it on the daily. It's just, you know, we might just be barely starting that little move, that little blip up. You might hold this trade for a week before it makes a run up here. But again, same thing. You'd keep your stop really tight and look for about 1-to-1. So let's do this. Let's try another pair. Let's go to pound dollar, another common pair. Okay, let's see. Let's see if we can find a clear one. Right now we have a lot of open gaps in the sentiment. Let's go back right here. Here's a counter trend against the major where there was really heavy resistance right on top of price. That was back on, looks like about like the 25th or so. Let's see here. Okay. Okay, so that would have been, let's see. Yeah, it would have been right here, this little blip in the market there. That little tiny pullback. That's all you're really looking for. We're not looking to catch these crazy giant counter trend moves. If you're trying to do that, you can get into a lot of trouble, like I say, with counter trend trading because they don't happen very often. Those major shifts happen, you know, less than any other pattern I think you can see on the market. Okay, consolidation and trends happen consistently, but major shifts of trend don't happen that often. Okay, so it's better just to, when you see a shift, just take a small profit. Who cares if it ends up going another 500 pips? That's not what we're looking for here. Okay, so let's see here. We've got that little consolidation and that pullback right here. So what you would have noticed is, let's see if I can make this a little bigger. When you were watching the price right here, coming up, and then it went flat over the weekend, okay? So you've got the 22nd was a Friday, and then the market opened Sunday right there. So this flat period wasn't even there. That's the weekend. So when you came in on either Friday or on Sunday or Monday to trade, you'd see you've got a lot of resistance, limit orders, and you've got the market moving up, so this is a counter trend opportunity. And you would look then for the market structure high. Okay, now here's what's going to happen sometimes. On this example it happened as well, is you're going to find when you look for that market structure high that it won't give you the confirmation. And that just tells you there wasn't enough momentum to for you to take the trade, to take the risk to take the trade. Okay, so here's your market structure high. That's a high, higher high, lower high. And it needed to break that low. You see how it didn't break that low? Came close, but that's where you would have sold if it would have broke it. So if it doesn't break, you don't do anything. It tells you that that uptrend was too strong. Okay, so let's see if we can find another one. Okay, there is one right here from with the trend. You've got that really heavy buy limit orders. Market's coming down around, what are we on? It was like a Wednesday, like the 20th or 22nd. Okay, so that would have been right here. Yeah, 20th. Okay, so that pullback was right there. And this is where there was really heavy buy limit orders. So you can buy when you see a market structure low form. And that would have given you the signal right here to go long. Okay, so you've got your low, lower low, higher low, forms that little V shape, and then breaks the high. There's your entry. Okay, and it gave you enough room to get your profit, to shoot for around 1-to-1. You know, you'd be putting your stop in on this. You could use the ATR indicator, go with something like 2 ATRs. There's different ways you could do this. You could put it below the low here. That's kind of what we've been talking about today. Sticking it below the low. This is a pretty big candle, so I'd be careful on shooting for the full 1-to-1. You wouldn't have got that until up here. It did give it to you, but it would have been a little bit risky going into some drawdown. Okay, but clearly it worked out really well. So I'm going to do one more example, and then we're going to summarize, and then I'll go into the Q&A. So let's do this. Let's switch over to a less common pair, maybe something like the, let's see, how about like the Euro Australia dollar. Okay, this one's always been in a major uptrend for quite a while. This year at least, I know it's been there's been a lot of breaks to the upside. So if you're taking these with the trend on a counter trend pullback, then you can see opportunities all over the place on this one. The most recent would have been right here when it pulled back. You had all that strong support hanging out right here. That was actually just a few days ago. Okay, so let's go grab the Euro Australia dollar. Okay. Okay, so Euro Australia dollar is, let's clear these off. Okay, so this little pullback right there matches right here. This little pullback around the end of the month, last month. Actually, that's wrong. That's over here. So this one here actually is, we're looking just a few days ago, so would have been actually right in here. Okay, so it's that little pullback is this candle. It's really small. Better way to compare these is to change your chart from candlesticks to a line, and then it will match up a little bit better. So so you'll see that little blip is actually right there. We could zoom in to make this better, but it's right there basically. So I mean, another thing you can do is just grab your crosshair on here and look at what that price is. Okay, so basically it's right around $1.50, maybe 50.50. Okay, so then you can just draw a line on your chart here. 50.50 is right there, so that's right where we were looking. Okay, so that corresponds to this little consolidation where there was all of that support. Buy limit orders right here, so there's your little counter trend pullback, and then you would buy when you see a market structure low. Okay, and that would have been, let's see, this is a low right here, a little bit lower. It's hard for you guys to probably see that, but this one went slightly lower and then slightly higher. Okay, so there's your little market structure low, and it needs to break that high, and you have an entry. And the nice thing is you can use pending orders on these when you're trading daily charts. That way you don't have to be there and you don't miss the trade. Okay, so you'd put your entry in. You could put your stop below the low of the entry bar, shoot for 1-to-1, and you got that very easily. Okay, so I've showed you a lot of positive trade setups. Some of these aren't going to work out. You know, some of these you're going to get in and not be able to get out quick enough on your target. Others are going to immediately go against you, and that's just going to be part of the game. If you keep your risk to reward at 1-to-1, you have to be just slightly better than 50% accurate to be profitable, and you can definitely do that with this method. So that's how it works. The idea is you've got the market sentiment telling you when you've got the significant support and resistance, and then you've got the market structure low pattern gives you confirmation that the market is responding to that market sentiment information. And that gives you the confirmation and the confidence to pull the trigger. So, as with everything I've taught, spend some time on going over the charts on the weekend and just pointing out these examples just like I did. And that way you can get familiar with the strategy. Also review some of the the other market sentiment strategies that I've taught. Let me go ahead and those are all on the blog. Let me go ahead and finish up by giving you guys the link to download the tool. And that will just be at TradeWestForex.com/informer. I'm going to drop it here in the chat. Okay, so that's where you'll download it. If you, when you first download it, it's going to ask you to log in. Don't worry, this is not something you have to pay for. We're not going to bill you. We have some features in there that are for our members that are paying, but everything that I've been teaching is all completely free. But when you first download it, if it asks you to put your username and password in, if you don't have one, there's a button on there that'll say, click here to send me a password. And that way you can get logged in and use all these features and play with some of the other stuff that's on the tool.